All right, guys, I don't know how much time I'm going to have here before Jonathan David wakes up and realize I don't hack this page again, but it is I, Special Agent Detective Moolah with the Credit Income and Assets Bureau. And I want to tell you guys the truth about home ownership, what it takes to buy a home in 2025 and beyond, right? There's a lot of misinformation to TikTok and these reels, and everybody's doing the dancing and all that stuff, but ain't nobody telling the truth, right? And I want to give you guys the truth about what it takes to get into a home, okay? And I don't care if you're talking about if it's a buyer's market, a seller's market, hell, even Boston market, whatever, right? These are the three things that you're going to need to do to be a home buyer ready in any given economy, all right? First things first, we got to make sure your credit is in position. Okay. All right. Your credit has got to be in position. And it ain't necessarily about the score. Now, although we do use score as a benchmark, right? That being said, typically from an eligibility standpoint, if you're at a 660 or above, that's going to put you in the best position to qualify for the majority of our programs that we have available. I'm talking FHA, VA, USDA, you name it, right? That 660 or above from a score perspective, that's going to put you in the best position possible to get your hands on the home. Okay. Now, outside of the score, it's really about the credit profile. Okay. So we're going to be looking at your financial habits. Have you had any late payments within the last 12 to 24 months? Okay. You got your collections and charge offs. Okay. Now, those things don't necessarily disqualify you from the home buying process, but they can make your profile more riskier and harder for us to pre-approve you in the eyes of a lender. I got clients right now, they're sitting with 645s, right, with the credit score, but they've had late payments up the wazoo, or they've got collections and charge offs and all this stuff that have kind of built up. And it's hard for us to get that approval. Now, there are some other ways we can help get you into a home if you have the credit scores or your profile isn't that strong. Let's say you might be in the 500s, right? We have a program is what they call a manual underwrite. This is where we're going to look at some alternative factors in order to help get you into a home. We're going to see if you've been making payments on time. So no late payments, no 30-day late payments in the last 12 months, no 60-day late payments in the last 24 months. All right. So that's one of the steps there. We got to make sure you might need to have a couple months reserve set aside. Okay. Your DTI in terms of your purchasing power is going to be capped at about 50% on the back end. Okay. The rental payment history will be huge. That's another big supporting factor that could help if we go that alternative route. As a matter of fact, rental payment history, regardless of if we're doing a manual underwrite or of if you're going FHA or convention or anything else like that, that can be a positively reporting trade line to help strengthen your profile. Okay. So don't sleep on that. Report those rental payments, get credit for that. You can go to Rental Karma, rentreporters.com. I think if you click the link in my bio, I may have I was an affiliate with a company called Boom Pay. Now, what I like about Boom Pay is this, okay? Boom Pay, they will report your rental payments, okay, across all three credit bureaus. All right. So that's important because when we pull your credit report, we look at your file, okay, you're going to get credit for a trade line that's reported to all three of those bureaus, right? So, a lot of other credit cards and things like that, they don't report to all the same bureaus across the board, but you can get your rental payment history to do that for you. Okay. So your credit's got to be, it's got to be in a good place. We're really looking for a strong credit profile to help you get into a home, okay, in the year 2025 and beyond, right? So as much as people move the goalpost and different administrations come in and they have things that they add and take away, that stuff doesn't matter. What really matters is you want to have a strong personal credit profile so that way you are in position. So strong personal credit profile looks like positive reporting accounts. So like your credit card payments, all right, auto loan payments, student loans, whatever. Make sure you're making those payments on time. If you don't have any of that stuff, maybe we need to manufacture it for you. Shout out to one of our other counterparts here. She actually had a client who didn't have any credit score at all. But what she did was she created trade lines for him based off the payments they were making for things like their utilities, their cell phone bill, right? Rental payments, things like that. Documented a 12-month history of that on time payments, was able to use that information to help her get into a home. Okay. So we want to make sure we have positive report and trade lines. All right. So no late payments on those. We want to avoid the collections and charge offs. And if you do have those negative things on your credit report, we know life happens. Try to address them. Okay. I'm not necessarily saying pay everything off, but if you do have to pay it, try to get a pay for delete so they can remove it off your credit report. But before you go doing that, come see me first. Okay. There may be some workarounds or some things that we can do. Okay, they still help get you into a home if you have those negative items there. But the goal is to minimize them showing up on the credit report, okay, as best as we can. So credit is extremely important. Like I say, it's not necessarily about the score. The score is a benchmark for eligibility. 660 and above is about right about where you want to be, because that's going to give you access to some of the better programs, better pricing, and things that we have available in the marketplace. All right. So after credit, the next thing we're going to be looking at is your income. Okay. What you do for a living, how much you make. Okay. What you're showing on your tax returns. If you're a Schedule E or your 1099, I mean, Schedule C or 1099, or if you own real estate, that'll be your Schedule E. We're going to be looking at a combination of all of that to determine your income, and also depending on which program that we are going with. The main thing that we're going to be looking for is a 2-year work history and a 2-year income history. Okay. You want to be as consistent as possible with the income documentation that you're showing, because that's the stability that we're going to use to pre-approve you or determine if you are truly home buyer ready and in a position to carry your mortgage, right? We're looking for a 2-year history and a 3-year continuance of you being able to show or prove you're going to still generate this income. Okay. So for you out there, let's say, for example, if you're a W-2 employee looking for that 2-year history, right? Now it's important. Don't go changing the classification of how you make your income. Okay. So if you're a W-2 employee this year and then you want to switch over to an entrepreneur, you want to go 1099, or you want to go, Schedule C the next year, don't do that. That's going to mess up our home buying process, because we need that 2-year history of you earning that income. Okay. Based on that category. Also, too, you guys out there, you got part-time jobs, you got side hustles, whatever the case may be. All right. If you want to use that income from that part-time job, that side hustle you got going on there, we need a 2-year history of that as well. We need tax documentation. Okay. And if it's, if you're doing the 1099, the Schedule C stuff, don't be afraid to show a little profit. Okay. Because if you're showing the loss, that's going to hurt your buying power. Okay. We're going to have to factor that in against you. Okay. Instead of using it to help your purchasing power and strengthening out your profile there. Okay. So, part-time jobs, side hustles, all that stuff, we need a 2-year history of that. File taxes on that stuff. Okay. Legitimize that business. If you're making money, okay, and you want to use to get into a home, right? You got to legitimize it. You got to show it on the taxes there so we can use that to help you get into a home. And see, these are the things that people aren't really talking about. Now, everybody's talking about, oh, you don't need any money. You don't have to do this. You can just get into a house or nothing. It don't work like that. All right. Everybody want to be a homeowner till it's time to do what homeowners do. All right. So we want to make sure we got the solid income. Okay. Solid 2-year history of all types of income that you want to use. I need a 2-year history of it. And I got to be able to document it, okay, from a tax perspective, if you want to go ahead and use it, right? So that's pretty much the income portion there. And the third thing is assets, okay? The third thing is going to be your assets. And so assets can be any money that you have saved or set aside, okay, for the home buying process or to help you build or establish your net worth. So this could be 401k accounts, 403bs, TSBP, whatever those other plans are. If you're a teacher, depending on your line of work, if you've got some type of retirement account, we can use those funds to help you qualify for a mortgage. A lot of you guys, you may not have the money saved in your personal checking or savings, but you got the money in a 401k account. Okay. All we would need is a statement to show how much you have access to, what are the terms of withdrawal. Okay. And then you can use those funds to help you get into a home. All right. So assets, that's the third thing you're going to need. So any money you have savings set aside, okay? 401k accounts, savings accounts, mutual fund accounts. I got people who send me, shot snapshots and of their, Robinhood accounts, whatever your portfolio is that you have set aside. We can use that to help you get into a home. You guys, and that's essentially right. That right there, those three things I just covered are the three things. Okay, those are the three things that you need to have in place to get into a home in any market and any economy. And this is going to be the case whether you guys are getting down payment assistance or grants or whatever the case may be out there. Okay. This is how you truly put yourself in position. Okay. It takes money to purchase real estate and to purchase a home. Okay. I want to put down the myth or whatever you guys may see out there on social media. And you got realtors and other people promoting these programs to get into homes. Their responsibility is to show you the house, right, and make sure it's a good deal for you, not to promote the programs. That's my job as the lender with the CIA. We're with the credit, income, and assets. We promote the programs to help put you in position to purchase a home. Okay. And so we're familiar with the inner workings of these programs, and don't get the bait and switch, don't get duped or anything like that. I don't care what anybody says. Okay. You need money to purchase a home. There really is no true thing as no money out of pocket. Okay. Every time you purchase a home, it requires you to have some funds up front. Yes, you can get some credits and things like that on the back end. Okay. But you got to, there's four times you're going to be expected to pay throughout a real estate transaction. Okay. First time you're going to be expected to pay is going to be your earnest money. Okay. Now you're probably saying, all right, who was earnest and why you got to give them some money? Well, the earnest money lets the sellers know that you as the buyer are serious and you want to put this home under contract. So in order to do that, you've got to give them a little bit of money to do that, right? It may be 1,000, maybe 2,000, 3,000, whatever the case may be, whatever they're asking for. You've got to come up with those funds in order to go into contract with that home. Now you get credit for the earnest money because it's a portion of your down payment, right? You may end up getting it back at closing, or it may come in the form of lowering some of your other costs with the home buying process, whatever the case may be. However your deal is structured, you may see that money again in some capacity. All right. The second time you'll be expected to pay is going to be for your inspection. Okay. Now, an inspection lets you know as a buyer the condition of the home that you're purchasing it in, right? It's pretty much a safeguard to make sure you don't buy a lemon as a house. Okay. There's a lot of stuff that happened over the years in the mortgage industry and the home buying process. And now this is one of the best times to purchase the home because there's so many guardrails and protections for you as the buyer to make sure you're truly getting a good deal, right? So that inspection, they check for termites, roofing, plumbing, all that good stuff to make sure the home is in a suitable condition for you to purchase it. All right. And that's typically going that can typically run you, let's say minimum about $550. And you can really get deep into the weeds with those home inspectors. I mean, you can do all types of scopes of the pipes and different things like that. And you're testing for radon and all this other stuff, but most folks are pretty good with the standard inspection. Like I say, run you about 500, upwards of $550, $600, something like that. And that way you can get into a home. The third time you're going to be expected to pay in a real estate transaction is going to be your appraisal. Okay. So your appraisal is going to make sure that the purchase price of that home is truly worth the value in which the sellers are selling it for. And also, that's going to be the safeguard for me as a lender. Okay. To have that appraisal in place so that way I can issue you a check for what that home is truly worth. All right. So you can't go out there and purchase something for 250, right? Expect me to finance it as a lender, but it's really only worth 150, right? It don't work like that. Okay. So the appraisal is a safeguard for the lender as well as you as a home buyer as well. All right. And so the fourth time you'll be expected to pay, that's going to be your closing costs. You might have realtor fees. You're going to have origination from the lenders. You're going to have title company fees. Now, title company fees these are probably the most important fees that you'll pay in a real estate transaction because title company fees make sure that you are the sole owner of that property. That means no one else who's done work on that, no outstanding tickets from the city or anything like that. Nobody can place any liens on it to say that they own the property. Okay. or have rights to the property. It's yours free and clear, no other debts, no other outstanding liabilities or anything like that. That's what the title company does. They'll give you a clean title saying that you are the sole owner, okay, of that property. And so those are essentially the four times you'll be expected to pay in a real estate transaction. Now, I was just on here for a few minutes. I just wanted to come give you guys this information because I want to equip you to purchase a home in any given economy. So let's recap a little bit. These are the three things you're going to need to purchase a home in any given economy. The first thing is going to be that credit, okay? Going to determine your eligibility. We want to make sure we can put as much distance in between any derogatory accounts, late payments, anything like that within the past 12 to 24 months. That significantly improves and increases your chances for an approval. Now, that's not technically a guideline, but it's a best practice from the hundreds, thousands of deals that my team has done over the years to put you in the best position to get into a home. We want to minimize derogatory accounts. It's not a complete death sentence. Sometimes there's some things we can do to work around that or address those accounts, right? But we could handle that on a case by case basis. But for the most part, let's keep a strong profile, no derogatory accounts, make your payments on time, make sure you're using your credit cards appropriately. Don't max them up, keep that utilization low. The best rule of thumb to really see your credit profile improve and your scores go up is to carry a utilization of 10% or less. All right. 30%. I know it says 30% on some of these sites and blogs, but at 30%, they're still making a lot of money on you. You're still carrying a lot of interest, and your score is probably still staying standard because that's pretty much the average is to have your utilization around 30%. You keep it below that threshold, your credit profile, your score is going to improve altogether. Right. So the second thing is going to be that income piece of it. Okay. So if you got a 2-year income history, that's what we're looking for. Maybe even somebody may be in college or you're on the verge of graduating. Okay. If you got an offer letter, we could potentially use that offer letter as your time spent in school. Okay. And in a specific field, if you're working in that field, we could use that to help you get into a home. Okay. That's for those folks who are in college getting ready to come out to the workforce, or let's say you're already out in the workforce looking for a 2-year history, right? Of a consistent classification of income. So if you're W-2 now, I need a 2-year history of that W-2 income. If you're 1099, I need a 2-year income history of that 1099 with some carve outs and caveats to that, but we can talk about those on a one-off scenario. But for the most part, like I say, we want a 2-year income history, okay? 2-year income history to use that to help you get into a home. And like I said, last but not least, assets. You need some money to get into a home. I don't care what anybody promotes or says here online saying you don't need money to get into a house. It takes money to start the home buying process. And anybody telling you don't need any money, I tell you to run. I reckon you run. Right. So that being said, that's all I got you guys for this evening. If you're ready to buy a house, if you think you're ready to buy a house, hell, maybe you want to invest in real estate. Maybe you already got the house. Hell, maybe you want to refinance. Maybe you need some equity. You want to pay down some debt. Kids going to school. You want to use some equity in your house to do some home improvements, or maybe start a business, do an investment property. If you want to do anything house related, okay, whether you're buying a home, investing in real estate, maybe you want to access some equity. All you got to do is click the link below attached to this live video. Okay, someone from my team or myself will be in touch with you. Jonathan David, he may reach out. Like I say, I'm with the CIA Credit Income and Assets Division. I'm Special Agent Moolah. Okay. And hopefully you guys use this information to help you get into a home. All right. But that's all I got for you this late this night, early this morning, depending on when you guys watch this. I don't know if I'll leave this thing up or not, but just click the link below attached to this live, and I'll see you guys soon.